you could argue that they might be on that yacht not because of the crypto that they're telling you about, but maybe generational wealth came into play and that part is being left out.
Yeah.
Or any number of reasons why they found their
That's
way
like
there.
the joke with the guy who like built his wealth from selling.
How to be a millionaire. It's like, don't buy any lattes. Always invest your money. Drive a crappy beat up car. Inherit $3 million from your father.
Right.
That's it. So what happened the last time we spoke?
Oh, we spoke like 10 minutes ago.
Well,
not
apart
that
from
much could have happened.
in the platform. So last time we had any useful discussion as part of the Possum podcast. What happened? Did the Fed stop raising rates, or was that before? Do we remember? It's been a minute.
That might have been, I think that's
Yep.
a new development since the last episode.
Yeah, so talk about that. A pause on rate hikes, perhaps?
Yeah. So we all know that it is one of the fundamentals of our economy, how the Fed moves the interest rate, which causes cash to be more expensive or less expensive. And since when did they start raising rates? Do we remember? It was last year.
Last year.
I was a young boy.
Yeah, right. I had hair back then.
I didn't have a mustache.
I think it was February 2022, somewhere around there. Yeah, when inflation hit at 9%, and they started going aggressively after that. And this is the first time they decide to say, you know what, we're gonna pass this time.
Okay, so they've been raising for a while.
Yeah,
Interest rates are high.
Inflation
Now
is
there's
down.
relatively. Yeah.
Yep.
Inflation is trending in the
Better.
direction they would hope.
Yep.
Now things are seemingly expensive, including cash,
Yeah.
and we're pausing. And you would say there's a lagging effect,
Yeah,
an
there is.
aftershock
Yeah, of course.
for
yeah.
raising rates.
Yeah.
One of which is potentially the unemployment number going up.
Yeah, unfortunately, yes. Unfortunately, we wouldn't like to see that happens, but unfortunately, it does. You increase. We talked about this before. We increase interest rate with the hopes that you cut down inflation, but in the process, unemployment rises. But also the mandate is not too much. So we're still below full employment of 4%. So we're still on good terms. But there will be people who will be, unfortunately, laid off. But that shouldn't last for long unless something else happens, which is unlikely at this point, yes.
Yeah.
You can't say specifics, can you?
I don't want to mention the word.
Okay.
The word of what we cannot speak.
That's fair. That's fair. In golf, if you what's known as shanking the ball, you don't say it. You can acknowledge that something just happened that was very bad, but you can't say it. Otherwise, you bring it upon yourself. Kind of like Beetlejuice. Okay, so expectation, you're going to see unemployment start to rise. By how much, we don't know. I suppose only the Fed really knows what percentage they are comfortable with. Bonds continue to be an appealing investment.
Oh, yeah, no, that is a great point that you brought here because we always know that bonds are fixed income, or they call it like the more conservative side of investments. But the unique circumstances that we are witnessing right now is bonds can also be used for other purposes, not just conservative, like generating a specific income every specific period of time. Now you can also use it for capital appreciation, which is kind of unique. And I love being in this time to see that actually happening.
Yeah. If you look back over the last 2 years, that certainly didn't seem to be the case. So seeing bonds appreciate in price as opposed to just falter a little bit. It's probably a bad word to use, falter, but
Yeah,
it hasn't been great.
Yeah, it hasn't, and that's probably
Speaking of falter, defaulter.
defaulting. That's mostly for funds. What we didn't see well in 2022, we saw some funds, we can't mention names, can we?
I don't believe that's encouraged.
Yeah. So just for all the lawyers and people out there, we can't mention names. Nor we recommend anything, just in case. Funds usually move downward in such circumstances more than individual positions when it comes to bonds because of the way funds are constructed. Even if they are managed usually by fund managers and they have objectives, each of them, different one. Regardless, though, because of the composition of these funds, you will see them dropping quicker than when you, say, hold an individual bond.
So inside of any given bond fund, we won't mention any names like you said, but how many bonds do you usually see inside of one of these funds as opposed to just going out and buying a bond individually?
Oh, thousands.
Thousands.
Because, again, it depends on the bond fund. There are broad market funds, and they try to mimic the entire bond market, and those would have thousands upon thousands.
Right.
Because they try to mimic the bond market, which is huge.
Right.
And that will include long-term, short-term, discounted, premium, less premium, you name it.
Yeah.
All sorts of agency, corporates, everything.
Yeah.
So you can imagine the turnover ratio and what's coming in versus what is being matured, what's matured actually,
Right.
and what's being called, et cetera, et cetera, et cetera.
Yeah. So that reaction to what the Fed is doing, you can kind of imagine that to be almost like trying to steer a ship, right? If you have a small boat, you can probably pivot pretty quickly.
Yeah.
And that would be small boat would be an individual bond. The ship is the fund of thousands of bonds. It's just a lot harder to make big reactions to rates, right?
Yeah, and you have like thousands, and they all move differently. So you can imagine how sporadic that could be. Speaking of ships, I like that metaphor because I heard somebody the other day mention that the Fed, when they're trying to navigate the economy out of what we've seen with all the inflation and without hitting the shore of the word that we cannot speak, it's like steering a ship looking backward. So the ship is moving in one direction, you're looking at another direction. And what they're looking at is all these metrics: unemployment, inflation.
Well, they're looking at the wake.
Yeah, and those are lagging effects. So he's trying to make a decision based on the new data, but that will not go 100% on course.
Right.
But that's very much expected. Just to imagine how hard of a job they're trying to do, and so far they didn't do a bad job, to be frank.
Yeah.
All right, so I want to dig out of, rather. We're talking about, okay, you can buy actual bonds, or you can buy ETFs of bonds, or you can buy mutual funds of bonds, and they measure the 7 to 10 year, and sometimes they measure the 1 to 5 year, and sometimes it's corporate, and sometimes it's treasury, sometimes it's this and that, and there's blends and da 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 da. I want to talk about simplifying investments in general.
No, that's a good idea.
I feel like I've already somewhat ranched out, I think both of you, about this, but I happened to see a portfolio recently that was full of, okay, we got your small cap and your mid cap and your mid small cap and your baseball cap and your large cap and your global cap and
all the caps,
and there's a million of these, and then we got your bond and this bond and that bond. And I asked the person, I said, when you open a statement, does this read like hieroglyphics? And the answer was obviously yes, because what are these 30 things inside my one account, and why do we have them? And there was no, if your client can't answer that question, then you're probably not doing it right. Now, the advisor answer is probably, well, you're well diversified. It's like, from what? What are you accomplishing by owning literally everything other than being able to cover your own butt in a meeting when somebody says, well, I noticed that this isn't performing? You can go, well, thank God we had 7 other sectors or 7 other types of investments to say, well, that one is, and I told you, sometimes some will be up and some will be down.
Right.
So I think there's a use of overcomplicating a portfolio in some ways to justify like what we do, right? Like I think that's a common thing for a decent amount of advisors, unfortunately, to complicate something to the point where a client is now afraid to ask the question. And I like to think that what we do here is the exact opposite, to the extent of, if you have an overly complicated portfolio and it's not doing well, it's so complicated you don't know how to ask a question. Versus we try to keep it as simple as possible so that a client can tell us exactly what they're uncomfortable with or exactly what questions they might have because they recognize what they're looking at.
Yeah.
And to, again, I'm troubled, I guess slightly annoyed when I saw this of none of these have a distinct purpose. You don't know how you're going to pull out of this one day. You don't know how any of these individual investments work towards your goals, which is a whole other thing of advisors not talking about a person, just going, I'm going to buy a little bit of everything and I hope it does well. And I'll hope you don't pick up the phone the one time a year I call you.
Right.
Can you speak to...
There is a tendency, unfortunately, in the industry to what you said. Put so much jargon in there, confuse them, so they're like, oh, okay, he knows what he's doing. But I think that's the opposite of what we should do.
Because it's not that, it's really not. What we do even is not that complicated. You can get extremely technical with it, sure. and there's good reason to, and obviously you're perfectly capable of getting as technical as the next person, and there's good reason to, but for a purpose, not doing it just for the sake of doing it. It's not some exhibition of, look how much things I know and how many terms I'm aware of that you're not.
No.
It's what is the utilization of any of these things, and I think most advisors in the position of overcomplicating the portfolio would have a hard time pointing to any one investment to say, well, this serves this specific purpose.
Right.
And I feel like that's a huge disservice to any client to not be able to identify anything in their own portfolio.
No, if they don't help them find the way, if you don't know where you're heading, all roads lead to the same way.
Yeah.
Which is not what we hope to accomplish right here. What do you think?
Yeah. No, if we're able to take somebody's holdings and then say, hey, you own these 15 or 20 stocks, like it just is what it is. It doesn't need to be cute. It doesn't need to be sexy or anything like that. And then if we have the ability to say, hey, all right, you own these 15 bonds. It's as simple as it can possibly be. We just look at it and say, this is what you own. This is what it is. And this is its purpose. And that's really the end of it.
Yeah.
Let me recall a story I had once. We had someone, he was asking me about a position, a company, like, is this good? Should I buy it? Like, and I thought about it for a minute. I didn't want to give a generic answer.
Yeah.
Then remembered what a professor once told me when I was in college. He said, and he was a very, very, very good guy that was there, very knowledgeable and smart. He said, when people buy stocks or buy any investments, it's like cooking. You tell me, is a cucumber good? For what? What are you trying to make with it?
Yeah.
Are you trying to make a salad? Are you trying, to cook chicken? What are you trying to do? So you have to know what you're trying to do to see if these fit what you're heading to.
Yeah.
Right.
That's very important.
Yeah.
I think in general, I guess I'm confused by the conversations advisors seem to be having with their clients.
We don't want you to be confused, man.
I am so confused, though. In general, but about this as well. We go kind of heavy on events for our clients. Mm-hmm. And if you're watching this, Jazz Fest November 4th? 5th? 4th or 5th? 4th? 4th and 5th?
Wow, 2
Can't
days?
be 4th and 5th. It's a one-day thing.
It's a 2-day thing now?
It's on the website.
Really?
For sure.
There's an invite going out. Regardless, the reason we do this is, one, because it's fun. And two, is because, again, these things have to be working towards something. And usually the only way we can be sure that we know what we're working towards is to spend some time with these people and to have conversations about their actual lives. Yeah. The amount of times that I think a client says something and isn't even aware that that's a financial consideration is surprising. I've seen people, hey, how's it going? How's work? Oh, actually, I'm my own boss now. This was, okay, you're your own boss now. Great. How's investing going? Oh, I just wish I could invest more than the $6,500 a year that I'm allowed to invest into a qualified account. You are. What? You are now your own employer. You can
Yep.
open a number of qualified accounts that allow you to put more money away instead of spending it on whatever.
Sure.
You can now invest it towards your future, towards your children's futures, whatever it is you're interested in. But it's simple conversations. Oh, I'm selling a house. Okay, well, what are the capital gains considerations? Can we tax loss harvest somewhere? I'm shocked by the amount of advisors who, again, will not have that conversation, but will instead bring somebody into their office and go like, okay, you're small, medium, large cap, and it's so everything good. We'll see ya, and that's the end of it.
Yeah.
I've quite frankly, I've worked in places where even I, as somebody who is in the field,
Yep.
have left meetings going like, what the hell did we just talk about? And I guess it works for some advisors because again, there's an intimidation of, my guy's really smart. I don't want to waste his time, or sounds like he's got it figured out.
Right.
So yeah, it's
and-
irking me. It's
Yeah.
very much irking me right now.
And it always feels good whenever we leave a review, for example, and we've provided the person with something more than they could just go home and read off of their statement. I feel like that's kind of a common thing too, is, you'll have an advisor that'll go through a review and you talk about, like you said, all these ETFs and mutual funds and what have you, and then the performance, and there's no substance. You're not talking about what's this money supposed to be doing for me? Why is it the way it is? What is it? What's the purpose?
Yeah, I don't. It bothers me if somebody
Love that word, purpose.
Purpose.
Justin Bieber album.
Did not know that.
It bothers, nor do you need to. It bothers me when you can look at a client's planning and saying, okay, I know who this person is. They like to do these things. Those things cost this much a year, and that's
Right.
what's going to make them happy. That's how you can help somebody, is by helping provide the means for them to do the things that they enjoy. And then some other advisor goes like, I think small cap's going to be great for you. Average year
Awesome.
it's going to return whatever it returns. Like, why? Why do they need that? They don't need that.
Do we need
You
that?
don't need the risk, yes.
And it's somebody who's having a horrible time as an investor in terms of their experience, is going like, this whole investing thing is horribly uncomfortable. And that's not to say that there's a clear-cut way to avoid having an unpleasant experience as an investor. In the last year and a half, most people have had one of those experiences.
Sure.
But it's taking the unnecessary discomfort out of the experience that I don't think most people are taking the time to do past an initial conversation of, does this make you uncomfortable? No? Great. See you in a year.
Yeah, and that goes back to the whole, timing the market, time in the market thing, and that's a major component of what we do for people, because we've had this conversation with Tammy. I can't tell you how many times. Is it good enough to invest in the S&P 500? Sure. Is it good enough to invest in the S&P 500 if it's down 20% and your client sells? No, probably not. We know that it's going to get whatever it's going to get over a certain number of years. Again, disclaimers, can't be too specific,
Past
but
performance is no indication of
right.
Investments always carry loss.
But if we're invested in what we feel over time is the quote unquote best thing, and then somebody jumps ship on the way down, knowing that it's probably going to rebound, well, it doesn't help anybody. We need to be able to cater to that person to make sure that they're comfortable in whatever ride we put them in.
Now, here's the alternative to that I think people should also be wary of. I'm going to equate it to tennis. Well, I'll tell one tennis story. I have two, but I'll tell one. So, as the people at this table know, I recently played somebody in this building in a match of tennis. The results were not as anticipated. However, a thing happens on the tennis court, at least for me, because I'm young and aggressive and should probably relax. But you get behind. And now all of a sudden I'm going, okay, well, every shot's got to be a winner. I don't have time now to rally and play the game. I need to hit winners, and I need to hit them now. And there's this desperation, and there's a lack of, I'm not that good of a player. Just like most people aren't that good of a stock picker or an investor, right? You have to be patient. You can pick your spots, sure, when it makes sense, when it can't hurt you.
Sure.
But not every single shot you hit has to be a winner. Sometimes you just have to stay in the game. And so I've seen the inverse of jumping ship, of people jumping on ships.
Sure.
Because they go, well, we got started a little bit late. and we need to make it up now. And if you get started late, you likely have very little experience as an investor. So when the boat starts rocking, you're looking for a way off.
Right.
And now not only were you already behind, but now you've lost money because you got in over your head. You likely weren't the stock picker of the year, as most of us are not. And it results in an awful experience that in some cases just turns people off from investing entirely. And then some cases you end up working forever because now you don't trust the stock market because the game is rigged. In some cases, you're just gambling your money away. There's the other side of the coin there.
Right.
Just because you're behind doesn't mean every shot you hit has to be a winner. You just need to stay alive to pick your spots.
Yeah. No, just chipping away at it, no matter if you're, completely behind the 8 ball or maybe you're starting off super young and, hopefully avoiding those let's get rich quick, but that's a topic for another day. Yeah, just chip away at it.
People love that topic.
Yeah.
Tomorrow.
On the next episode, we'll tell you how to get rich quick.
Yes.
Yeah.
A lot. Quickly. You won't even feel it. It just will happen.
Yeah.
So here's the secret sauce.
That was sarcasm, by the way, just to be clear. Yes.
Yes. Okay, I drew this.
Oh, I love this. Yeah, nice.
Is it an alligator?
I'm not sure. It was going to be a dog, and then it turned south.
Go Gators.
No.
That means a lot in our office.
Gator drawn by the FSU guy. Oops.
I draw a spear going through this thing. Okay, so we talked a little bit about bonds. We've talked a little bit about overcomplicated portfolios. We've talked a little bit about getting to know your client. We've talked a little bit about the lack of clarity surrounding the dates for Jazz Fest. What we have not talked about since the last episode is that I have a mustache.
I can see that.
Yeah.
Okay, thank you for saying so. First of all, I'm bullish on mustache.
Yeah.
I am.
And that's not a company.
I am presently. If there's a ticker that's mustache, I'm in trouble.
Just to be clear,
Yeah.
I am bearish on haircuts at the moment.
Can I say that too?
That you are bearish on haircuts?
Yeah, am I allowed to say that?
Yeah.
Okay.
You might be neutral on
I'm
haircuts.
pretty bullish on that.
This isn't financially related at all. I've just wanted an honest interpretation because rarely do I have a mustache.
Really?
Yeah, not frequently do I have a mustache.
Right.
I would say 93% of the year I do not have a mustache.
I should start.
Gearing up for the colder months?
I'm gearing up for the colder months, but here's my issue with the mustache. Is one, I grow such horrible facial hair that like when it gets here, it seems like a shame to shave it because I work so hard to get there. But the weird thing about it is nobody ever comments on it. So it leads me to believe one of two things. Either it looks normal and everybody's like, oh yeah, whatever, he's got a mustache. Actually, there could be 3 things. 1, it looks normal.
4.
No big deal. 2, it's so unimpressive that nobody's even acknowledging that it is a mustache because it would betray the meaning of a mustache to call it that.
Okay.
Or 3, it looks so awful that everybody feels mean pointing it out.
Okay.
So I'm just seeking a little bit of clarity. You guys see the mustache? I think I came in with this late last week and there was not a single comment of my mustache. Is it just that I look like somebody who could have a mustache? Is it so bad you don't want to talk to me about it? Is it so unimpressive that you don't want to call it that?
But that's why I focus on your eyes when I talk to you. Like, don't look at the mustache.
Yeah, I'm so glad you brought this up. I'm not sure how to break it to you, but
It's a bad mustache?
No, it looks fine.
Okay.
Looks fine. I'm just glad people don't talk about mine because it's probably invisible. I don't grow facial hair very well either.
Who's going to tell them?
I don't know.
Oh, I turned the table on myself.
Off air, not here.
Cut.
But no, if you're worried about that, don't worry. I'm bullish on the actual mustache, not the company.
Right.
Different case.
Okay.
Just that.
Thank you.
I would say go for it. Keep it, but you have to keep it though, because
the issue is November is coming.
Exactly, you have to keep it because the thing with mustache is once people get used to you having it, you can't lose it.
So I have a friend who's had a mustache probably for at least the last 6-7 years. I mean,
Yeah.
it's a good, like, my mustache is nothing compared to this man's mustache.
Is it twirly?
No. It's not
Those
like
are
that.
impressive.
It's just so solid. And so it's to the point where, like, if he shaved it, it'd be weird. You maybe wouldn't even recognize him if he shaved it.
Well,
at
that's
this
my point.
Yeah.
Right. It'd be like taming with hair.
But my, which I recommend that he grows out, but I think it might be blue.
Yes, with patches of purple.
Well, here's my thing about the mustache is, one, if I were to stand next to this guy, you would laugh at mine. That guy's got a mustache. You have nothing. My other thing is, I feel like mustaches are similar to sort of the fedora philosophy of only one fedora per friend group. You can only have one mustache guy.
Oh, I didn't know that was a thing. You can only have
Have
one.
you been running around in a gang full of fedoras?
No.
Okay, good.
I haven't been out on the beach for long enough, but
Okay.
Yeah.
But I'll pay attention now.
Well, that was today's mustache update. Brought to you by. I'm trying to think if anything else interesting has occurred in the last week that we need to
There's always
address.
interesting stuff. It's just, is it interesting enough to bring it up on our awesome podcast?
Sam Bankman-Fried is on trial.
Oh, yes. Yeah, how could we? Yeah, by the way, I was listening to one of those. I don't want to mention it. I have a few friends who were at some point into all this frenzy.
The crypto frenzy.
Yes,
Yeah.
the crypto
Yeah.
frenzy. And we even had some people approaching, not me personally, just friends of mine told me stories. They had people approaching them with ideas about funds that invest in that kind of asset class, if you may call it.
Sure.
Yeah.
And none of it, and here's the thing, none of it is based in the US. So yeah, we had a lot of, I heard, I'm sure you guys also, back in the day, like 2 years ago, when it was the frenzy all over with crypto, you had these people coming in and say, oh, we will have these funds based overseas in X city somewhere. And it's not here because of regulations, all of that. Well, guess what? Regulations are there for a reason. And what do we see now with all what's going on with FTX? You see all the insanity that's coming out with all the details. I don't know how deep you.
I don't go that deep into it. I don't care.
Oh, of
I mean,
course.
it's interesting. You know, the height of it. Obviously, you check into it, and I have some semblance of an understanding of the blockchain and some of the technologies there that have seemingly useful applications. I'm sure anything I say about this, any crypto goes, he doesn't get it, and I don't. To be fair, I don't. But no, I don't. I never once thought, let me get some of that, because I figured I missed that boat already.
Oh yeah, with crypto.
So
yeah.
once that happened, I went like, okay, well, I'm going to let them have their fun and their yacht parties over there, and I'm going to stick to what I know, which is what we do. So I haven't been following it that closely because it has very little impact on me at the moment. But
But I want to mention something. See, when we do any investment, when our clients or our models, etc., we go into the company's financials and their balance sheet, income statement, etc., all of those things are actually regulated. Everything that they post as a public company has to be filed according to certain standards. And I bring that up because in the case of that company, when they used to have investors coming in saying, oh, we want to invest X amount of dollars, these guys didn't have any income statements. They had no fundamentals to show off or speak of. And it was just exchanged like, oh, yeah, we're doing X dollar in profit.
so what's interesting to me, though, is that is also the argument. Like, that's an argument against it. In our world, that's an argument against it. Would you agree?
Yeah.
Yeah.
100%.
That, at the same time, is the argument for it.
I hear you because what we said, oh, yeah, regulations, too much, etc.
It's a paradigm thing.
Yeah.
That's all it is.
But see what it led to. Is
Right.
My argument.
Right. But then again, the people are going to go, oh, I mean, there's the conspiracy theorists who are whatever going to say, well, the government doesn't like the idea of an unregulated coin or unregulated currency. Yeah, duh.
I mean,
No, they don't like that.
because that, I mean, wait, you want to, how about we start trading, I mean, no, with pens, that will be our coin now. But you tell me, no, I want that one. And we go back to barter. Do you think that is usable or applicable in our society nowadays?
Yeah, and I don't want to necessarily invalidate crypto to the part, because I just don't know. I I've steered clear of it for the most part.
Yeah.
I watch from afar. I hear what some guy who lost a lot of money at the bar tells me about it.
Yeah.
So I can't say for certain what's useful and what's not useful, but I do find it so interesting in the case of crypto that the same argument that's being used against it in our world of we can't see enough, we don't know enough, is the same argument being used for it.
Yeah.
Seemingly on the other side of, well, that's the case. That's why we like it, because nobody with their own interests and their own design has their hands in it.
Yeah, I understand. Yeah, I like it because it's unknown. I don't know anything about it, therefore I like it.
Yeah.
But no, I get it. I'm just making fun of but I get it. I understand.
Yeah, I'm hesitant to bash it one way or the other because I don't feel qualified to do so. We'll see.
We'll see.
Just like with AI.
Buzzwords.
No, but similarly, I mean, there's so much technology that we just don't know where does it settle into. When the pendulum is done swinging to it's the best thing ever, it's the worst thing ever. When it lands in the middle, what does that actually mean? For
it's just the hype. I'm against the hype usually. When something is hyped, you can easily tell that. Well, not easily, but you can start sensing that it's being overvalued, regardless of the thing. Now, we're not going into the actual core of what it means. It's just, if a company becomes popular for one reason, you'll have so many people buying into it, the price will rise. Doesn't mean, should I buy into it? Well, do you want to follow the hype?
Yeah.
I think it's interesting with any technology, they talk about how there's sort of segments or stages to any new technology. And there's the people who make it, these founders, and there's the early adopters. And then there's whatever the next one is, and it's kind of like, okay, now it's universally accepted. It seems unlikely to me that all the people who got burnt by crypto are early adopters. I just find it funny. It's like, wow, that's a lot of people in what is normally a very small percentage of the population.
Yeah, because it's accessible. I mean, the first hint to me, at least, that this was a weird hype was when you go online and you can check the biggest wallets. There's something called wallets where they put their crypto in. And you find that the actual structure that this thing, the crypto market, became is against its own fundamental, which is, it's decentralized. But you go in and you see that the biggest 100 wallets own more than 90% of all the coins in the world. Like, well, here you go. That defeats the very argument you're trying for. And that's why from the very beginning, I was kind of very skeptical of it. But the concept, maybe it's great. I don't know.
Yeah.
Again, to me, it's like it depends on who's explaining it. Sometimes, sometimes a guy will explain like, "Oh, that's a good point," and then some guy will explain the same thing in a different way. I'm like, "Well, that's never gonna work."
Right.
I don't know. I probably.
Well, what do we know? We only know what we know. Most of the things that we don't know are most of the things that we don't.
That is the truest thing that we're going to have on this entire show.
Yes, that's it. I'm out.
We know what we know, and we don't know what we don't know.
Exactly. Yeah.
Yeah, if that's your thing, being an early adopter and shooting for the moon, if that's your thing, there are plenty of places who can do that. That's not necessarily us. We have some opportunities to find some alpha, and then for the right person that makes sense, and we'll do it. But as Scott and most of us understand, this is not the place you go to make your fortunes, because it makes for usually statistically a very unpleasant experience if that is the expectation and the way you go about executing trying to build wealth.
Yeah.
This is largely not the place to do it.
Very famous person that we all know wrote a book just about that. I believe it's called "I've Never Made Anybody Rich." You might be familiar with the author.
There's a joke in there that I'm just going to leave out. I understand. I don't think social media makes it any easier to ignore the hype. when you see somebody you went to high school with or whoever it is, they're on the yacht and the supermodels are there and everything is good and look at how great this worked out for me. It's like, well, I'm just like that guy or I'm just like that girl. Why can't I do that? It's like, because that's an anomaly.
Sure.
That's lucky. It's unlikely that you and the person you know both get lucky in the same manner.
Right. And you could argue that they might be on that yacht not because of the crypto that they're telling you about, but maybe generational wealth came into play and that part is being left out.
Yeah.
Or any number of reasons why they found their
That's
way
like
there.
the joke with the guy who like built his wealth from selling.
How to be a millionaire. It's like, don't buy any lattes. Always invest your money. Drive a crappy beat up car. Inherit $3 million from your father.
Right.
That's it.
There's always one piece that's left out.
And then you can always brag about, oh yeah, I bought coconut stuff and it went up. You can say whatever you want at that point.
Sure.
So, I don't know.
Yeah.
It's tough to really tell the truth in that, man.
Well, I think the internet and we spent the other day looking kind of online at, okay, who are some credible, quote unquote, influencers in our space. And there was a couple.
Yeah.
But it's also so easy to misinform the uneducated, which most people are, not that anybody at this table is a genius, but this is what we do for a living. And it's something that I think in the school systems and everyday life, for whatever reason, is not something that is widely taught. So it becomes very easy to misinform the uneducated, especially if it's in the name of somebody else's own monetary gain, which is hard to decipher sometimes.
Sure.
So when somebody's on TikTok or on Instagram or whatever saying, hey, here's this product or here's this philosophy, pay me X amount of dollars and I'll make you rich like I am. I get how it happens and I get how it's alluring. It's unfortunate, but I get it. And I think if it seems too good to be true, it usually is, right?
Yeah.
I don't know. I think it's a hard reality to go, I'm not going to put, whatever. Say you're 20 years old and you have $10,000, which at 20 years old, I do not have $10,000 in my bank, but let's say for some reason you do. The idea of I'm 20, I'm going to give somebody $10,000 and they're going to turn it into $1 million. Like, yeah, you're 20. That sounds incredible. Of course you would. I think it's hard to then tell a 20-year-old, no, I'm actually not going to do that. Instead, I'm going to say you should, turn that $10,000 maybe into $10,000 or $10,400.
Oh,
and also, you should work for a long time and try to make a bunch of money.
Like, no, I don't want to hear that.
No, that version sucks.
I want to talk to the other guy.
Yeah, exactly.
So I think it's a danger. I don't know. It's a dangerous time to be a young investor, I think.
Yeah, and the other thing that's always interesting to me whenever you're seeing these people on TikTok, Instagram, whatever it may be, and they're saying, hey, go ahead and maybe pay me $100 a month or $100 a year, whatever it may be, and take my courses and I'll make you rich and you can be like me also.
Why is he selling courses if he's so good at what he does?
Right, you have to think about it that way. It's like, okay, well, you need his course to work for you to, quote unquote, become rich. You're paying him in his business where let's just say he has 1,000 people paying him $100 a year. He's making $100,000. It doesn't matter if his coursework works for him.
No, he already made the money.
He made the money.
And then you buy the course, and the course is about how to make a course.
Exactly. Exactly.
It's silly.
So you just have to be careful as to what exactly you're participating in and why. But yeah, those things have always fascinated me. This person doesn't need the thing to work. You're paying him.
So would you agree that the most valuable thing is the time? Because it doesn't come back. Therefore, that's what you should be investing in the most. By doing that, you can also, I think we talked about this before, use your money as your little soldiers to go out there and get you more while you are actually spending it where you want to.
Yeah, I mean, time is an abstract concept, and I can't tell you how, I could tell you I think this investment makes a lot of sense for you. I can't tell you how to spend your time. So I think what we try to do is give our clients their time back.
Exactly.
To say, we're taking care of this. We're going to make sure we keep checking in with you to make sure that what we're doing aligns with your goals so that you can keep spending your time in a way that makes you happy instead of wondering, is this sustainable or is this going to work?
Yeah.
I think that's something that we do. But even, you know, the younger investor, it's an interesting conversation, right? Like the retirement client that's, you know, hopefully you're now done working is the idea, and you have your time to do as you please, and we kind of understand the parameters of how that can be spent. It's the younger investor where if a 25-year-old said, hey, you know, I have $6,500, I'd like to max out my Roth IRA, but also I'm thinking about going on a trip to Spain, and it's going to cost me $3,000. I'm not of the sort of Ramsey approach of no, deprive yourself of everything all the time, because time is a finite thing, and we don't know for all of us when that ends. So I would have a hard time telling a 25-year-old don't go to Spain. But with the older clients, it's, you know, you have deprived yourself likely of certain things, of a lot of time being spent the way that you would like to spend it. So are you willing to let us help you so that you can get that time back?
Yeah. Yeah, and some could argue the process of, you know, saving money and putting money away, you know, with products and everything that you find in 401ks or other retirement plans, you know, they try to do a pretty good job of making that easy, where you can almost set it and forget it and still be okay. Once you get to that golden retirement time in your life, taking the money out and doing it thoughtfully and effectively is much, much harder to do. Would you say that's probably true?
I would say most people aren't given the playbook.
Is there a playbook?
Not the same one for everybody, but at least, you know, it's our job to know what to look for.
Yeah.
And I think in some people's cases, I would not be worried about them. Where I go, okay, that person has a clear understanding of what's within the realm of possibilities here and how to make this sustainable. There's some people who are really, really good at the saving part and the investing part and being disciplined part, but aren't so good on the back end when it comes time to go down the other side of Everest, because you got to retirement, you climbed all the way up.
Right.
Now you have to go down. Some people aren't so good at that, and there are certainly a number of people I can think of where I go, yeah, this makes sense for you, because I don't think you know how to protect yourself from yourself. Sure. And sometimes that's our job.
Yeah. Probably pretty common with, you know, business owners, entrepreneurs. They're really good at socking money away, growing a thing, and then they get, you know, to the other side of it, and they're trying to get down Everest, and they're looking over the vast world and go, oh man, now what?
Well, I mean, the issue, depending on the personality type, is right. It's hard to go uphill.
Sure.
Just harder. All of a sudden you get to the top and you go, oh, I can run down this side.
Yeah.
It's like, you can run for a little bit.
Yeah.
Pretty soon you're going to be falling.
Yeah.
And I think that's a mistake, especially high earners get into, because they're so accustomed to a predictable paycheck coming in. They're not really working with a finite amount of assets. They're working with a finite career span.
Yeah.
And they get into that habit that the second it turns off, they don't know how to switch gears, and they go, all right, I'm getting down this mountain quick.
Right. You know, and I heard something interesting the other day, too, talking about high-income earners, doctors, stuff like that, doctors and surgeons, for example. You know, they're really smart people. Their jobs are extremely specific. And sometimes that knowledge and education and that thing kind of bleeds over, and you kind of feel like you can conquer the world and you're an expert at everything. And a lot of times they'll develop by mistake or on purpose, I don't know, kind of poor spending habits or poor money management habits, and they can overcompensate that while they're working, because if you're making $300,000, $400,000, $500,000 a year, well, you can kind of make a mistake here and there and fix it. But on the back end, again, when you're running down the mountain, you don't have that income to help you fix the mistakes.
Yeah, there's no cushion anymore. You were able
Right.
to mask any mistakes you made previously by saying, well, okay,
You can pay your
I
way
owe
out
somebody
of it.
money. I'm not going to invest that $20,000 this year, but it's all good because I have $20,000.
Right.
That doesn't work when you're no longer receiving a paycheck.
Right.
That $20,000 and $20,000 maybe you have to give to somebody you owed money to. You have to be a little more diligent.
Exactly.
So yeah, that's definitely a danger for high income earners. Of you can mask mistakes for a long time.
Yeah.
And it is common, doctors, lawyers, engineers, not to single anybody out, but people who have pretty impressive higher education degrees are generally very intelligent people. Yeah, it's hard to decipher where does that area of expertise stop.
Yeah.
Because so far, I've been able to learn law, or I've been able to learn medicine, or I've been able to build gigantic buildings and bridges. Why would I also not be able to understand this? And it's
Right.
not that you can't. It's just that that's not what you spent all that time mastering.
Sure.
And some people have a hard time accepting that, okay, well, maybe that's somebody else's field. When
Yeah.
they've never found a field they couldn't conquer before.
Right.
So,
Yeah, which can be tough also when they see the positive and the negative in the account for when it comes to, return on 1 year or 2 years, which will raise up many questions. And I'm sure we had some cases where we got someone, prospect client, a friend, whatever, they show us their portfolio and they point out at the one losing position and they say, why is that there?
Oh, that's a fun topic.
While the entire thing is up 5%, but you've got one position or two that are down, like say 3, 4, whatever the number is. You go, oh wait, why is that there?
Right. Yeah. Why do we not always have winners in our portfolios,
Exactly.
Tammy?
Why don't we just always pick all the stuff that are only in green? That always and only go in green. Yeah. Why?
Yeah. We've been working on that all year to find that perfect portfolio, and we've come very close.
Yeah.
where did the market finish today? Was it up or down?
Good question. Does it matter?
Yeah, because I got to punch you, remember?
Yeah, people wish stuff. We have a lot of good wishes in this office, and we hope everyone achieves.
Me and
their own
Tammy struck a
office.
deal earlier today. If the market
he-
did not close positive, I get to punch him in the face.
He struck a deal with himself. So, I didn't shake hands on it, so hopes are hopes.
Well, good news. It appears that it ended positive. So
It did?
live to see another day.
Oh, damn. I'll
see you tomorrow at
No,
4
I
o'clock.
wanted to see it. What would happen if it was the other way around?
Well,
That's how we would have ended this podcast.
yeah. we weren't specific on which market, so stay tuned for the next episode and a black eye or not.
Exactly.
All right. Well, on that note, I think we've covered a wide range of things that hopefully somebody was able to find some insight in. But otherwise, we appreciate you watching. Everybody be nice to everybody. And we'll see you for episode 4.
This time real 4, yes.
Yep.
Yes. See you for episode 4 next time. Thanks.